What are Fibonacci levels in crypto trading? Fibonacci levels stemming from the Fibonacci sequence are horizontal lines that indicate where support and resistance levels are likely to occur on a price chart. The Fib retracement tool found in TradingView and other charting software is useful because it can be drawn between any two significant price points, such as a high and a low, and the tool will then create the support and resistance levels between those 2 points. When plotted on a price chart, the Fibonacci retracement tool draws horizontal lines at 23.6%, 38.2%, 50%, 61.8%, 78.6%, and of course 100%. Fibonacci levels can be used to buy into a trade, determine stop loss levels, or even set price targets. There are actually several Fib tools in TradingView, but the Fib retracement tool and the similar trend-based Fib extensions tool are the most commonly used, but we'll cover the latter in another video. Here is one example of how you might use the tool. On this example, we've had a solid run up, but as the price action begins to pull back, we want to know as traders where a good entry point is in order to ride up the next potential upward swing or impulse wave. Knowing the 382, 0.5 and 618 levels are the most important, traders will begin to scale into their positions to try and catch this upward swing starting at around 382, the first most likely reversal point for the price action, and then add to their positions again at 0.5. And then finally, traders will add to their position once more if the price action dips far enough to also hit the 618 level, which is arguably the most significant of the Fib levels. Traders know that a reversal at any one of these key levels is quite probable, and if the retrace does go as deep as the 618 level, traders will enter here with quite a lot of confidence, knowing the significance of this level in terms of the Fibonacci sequence and how it relates to something called the golden ratio. The golden ratio and its importance in trading and the wider world. Not all Fib levels are created equal. The 236, 382 and 618 Fib levels, as an example, carry special significance when using Fibonacci tools. This is because of something called the golden ratio, which is approximately equal to this number, which gets translated into three percentages: 23.6, 38.2 and 61.8. The golden ratio is frequently used by traders and technical analysts to forecast price movements. This is because the Fibonacci numbers and the golden ratio have a strong psychological importance in terms of herd behavior. The golden ratio is found everywhere in the world around us, and it impacts our daily lives consistently, from the shape of our ears to the number of flower petals, and of course the shape of galaxies in the cosmos. And even though not one of the big three and certainly not part of the golden ratio, the 0.5 Fib level is also widely used by traders, as an asset will often retrace by around 50% before continuing its original trend. Key takeaways then so far: always expect the price action to react to the 236, 382, 0.5 and 618 Fib levels, as their relationship to the golden ratio, excluding the 0.5 level, assures that these areas need to be negotiated. However, the 618 level is widely regarded as the bottom of the retracement zone for any given price action, so much so that the area between the 0.5 and 618 Fib levels is often called the golden zone, as the price action is highly likely to reverse around these levels if the price action retraces that far following a run-up. This makes the 618 level arguably the most important. But here's Bitcoin's current price action as an example. So this is Bitcoin 2-hour chart, and we've had this nice run up here from this point to this point, and that is what we've used to plot the Fib levels on the chart. And we're going to use these Fib levels to try and determine when a reversal is going to occur following this retracement. So right now, the price action is bouncing off the 0.618 Fib level, having broken below the 382 and the 0.5. And this is the golden zone here, highlighted between the 0.5 and 618 Fib level. So traders will be looking to the Fib levels to determine when this retrace will end and a reversal will occur. And right now, the price action is within this golden zone between the 0.5 and 618 Fib levels. Therefore, most traders and investors will be expecting a reversal out of this area at some point. But in this case, if the retrace doesn't reverse out of the golden zone and continues lower, the next Fib level to pay attention to is the 0.786. Now, some traders will also add the 0.764 level to their charts, as it's the mirror of 236. So just to alter that now for you, 786, Let's move that to 6.4. So some traders will have the 0.764 level on their price chart, as I said, as it's the mirror of the 236. But that percentage is actually not based on the Fibonacci sequence. So technically you should be using the 0.786 level instead. However, you'll often see both the 764 and the 786 on price charts, so don't get confused by that. Hedge funds, as an example, will typically use the 786 level as an indication of an asset that is extremely oversold. So a move below the golden zone to the 786 level is widely considered an excellent entry point, despite retraces that deep not occurring very often. But now let's take a look at how to plot these fib levels on a price chart using the fib retracement tool in order to assess likely reversal points during a retrace or pullback. So this is Bitcoin 2-hour chart again, except this time it's a blank slate. So in order to add fib levels onto this, we first need to select the fib retracement tool. So in TradingView, just go across to the side, it's the third one down, and it's the top of the list, fib retracement. You can also add it to your favorites if you want. So 1, 2, 3, click on this, fib retracement, and here we go. So before we can use the fib retracement tool, we need to decide between which 2 points we're going to use to plot our fib levels. So this was a run up here, and then we've had a retrace in the price action, and then we've had this fresh run up which started from here. So it's going to be between these 2 points, as this is the first major upswing following this downtrend. So in order to plot a retrace, we need to go from bottom to top. Get it all lined up. See, you just make sure everything lines up nicely. And there we go. As you can see, the price action is reacting to these levels quite consistently. See here, the 236 is acting as resistance and support, likewise with the 0.5 level. So let's just check that's all good and lined up. Yeah, that's really nice. Okay, great. And as you can see here, as we were just discussing, Bitcoin is currently testing the 618 level and is in the golden zone between 0.5 and the 618. And many traders will be looking now for the price action to reverse so they can benefit from a fresh upwards swing. Just as a little side note, before we continue, you might be asking yourself the question, what's the difference between the support and resistance levels that the fib retracement tool plots on your price chart versus trend lines which you've manually added? As Fibonacci ratios are fundamental to the price movement of an asset and the key support and resistance levels it has to negotiate, key support and resistance levels as a result will always have a relationship to fib ratios given the importance of the Fibonacci sequence. Hence why if you add trend lines manually yourself and then add the fib levels later, you'll find that typically they match up. But let's have a look. I'm just going to delete the fib retracement now and add these trend lines the old-fashioned way without the fib tool and see how accurate everything is. Let's have a look. Yeah, okay, yeah. Bottom here. Yep. So I'm looking for the most touches. Here we go. And here. And let's add the fib level back on. And let's see how accurate we were. Okay, so there you go. Right, so a little bit off. So we just adjust that. Yeah, okay, and adjust that. But as you can see, pretty accurate, meaning ultimately that all the trend lines you have been adding to your price charts yourself manually, you've really been adding fib levels because ultimately they're one of the same thing, as the mathematics behind price movement ultimately relies on the Fibonacci sequence to determine price action and reversals. So the reality is that the benefit of using the fib retracement tool is not so much that it gives you some hidden trend lines which you're not able to determine manually. What it does is it highlights which of those trend lines, which of those support and resistance areas are the most important and where reversals in the price action are most likely to occur. Hence why using the fib tool to map out your trend lines can give you an edge over just traditional unlabeled support and resistance lines. But what if there's no price action to help us assess where key support and resistance levels are? Say when an asset is ascending to all new highs or descending to all new lows. How do you figure out where likely support and resistance levels are in those circumstances? Well, you can use Fibonacci levels to predictively plot likely future support and resistance for an asset that has or is about to enter what's called price discovery. And in this example with Binance Coin BNB, that's exactly what's about to happen. So recently Binance Coin BNB put in all new highs just at 723.1, breaking the previous record of 69.3. And in that case, how do traders know where to take profits if they're trying to benefit from a move into price discovery? So when an asset enters price discovery, either retracing to a point below any historical price action, or in the case of Binance Coin here, rising above it, Fib tools can help you where your eyes no longer can. As based on existing price action, you can accurately map out key support and resistance levels for future price movement before the price action even reaches those levels. And this is how you do it. So instead of going from bottom to top, which we do for Fib retracements, where we can kind of see how far it's going to retrace, we will instead do the opposite, and we will go from top to bottom. Let's just get all this lined up, just see where the most touches are. Yeah, that's pretty good. Now we have 1 to 0 as opposed to 0 to 1, and the 618 level is in a different position. As you can see here, a very significant level for the price action, bouncing off the 618 consistently once it's broken through. However, you might be saying, well, hang on a minute, we still have no support and resistance levels for price discovery. What do we do? Just double click on one of the Fib levels, and you just need to add them yourself. So in this case, we want to have number 2, we want to have 200% level. We want to have the 1.236. We want the 1.236. We don't want it to be blue. No problem with the color blue. And then we want to have the 1.618. We then want to add the 1.5. We then want to have the 1.786. So just add that in. 1.786, and okay, and as if by magic, we now have support and resistance levels above the existing price action where there hasn't been anything historical to draw from. So now if we were going to buy the breakout of this all-time high and try and ride up an upwards move, we would know that the 1.236, the 1.5, 1.618, 786 or 200% levels are great potential price targets. But obviously we now know that these levels are not all created equal. So we know that the 1.5 level, let's mark it, is quite significant. So that would be a great take profit price point. We also know that the 1.68 is super significant. So if we get a breakout from BNB, 1.5 and 1.618 levels would be ideal to take potential profits from a move up, and that would be 43%. So that is the power of Fib levels and the Fib retracement tool, which can serve two functions. It can allow you to determine when a potential retracement will stop and reverse, but also to add extensions to a price chart to allow you to map out price targets when an asset is about to enter price discovery. The key thing to remember here is, when the price action is in an uptrend, to find the retracement levels for any downside move, using the Fib retracement tool, you pull from the bottom to the top, and then the opposite, from top to bottom when the price action is in a downtrend, and you're looking to find the retracement levels for an upside move. This is important as you need to have the 236, 382 and 618 levels in the correct order and position, as depending on whether or not you're trading a recovery following a downtrend or trading a sell-off following an uptrend, the position and order of the levels will be different for each scenario. Therefore, how you use the tool will be different as well. So the rule is bottom to top for downside retracements and top to bottom for upside retracements. Now we're going to take a look at how we can use Fib levels or Fib retracement levels in combination with more traditional trend lines. Like with any good trading practice, looking for confluence, the combination of several bullish or bearish ideas, is the key to becoming a successful trader. But when you know the importance of the 236, 382, 0.5 and 618 Fib levels, and once mapped onto a price chart, when combined with other more traditional trend lines, for example a diagonal line as seen in this example, you can then look for zones where these key Fib levels, but especially the 618 and non-Fib based trend lines, intersect. Here are a couple of examples of how this works. So on this example, the price action is currently retesting the 0.5 Fib level. And if we don't get a bounce here, traders will be looking to enter for a possible reversal at the 618 level instead. And because of the significance of that, when it intersects with this diagonal trend line, it creates this very powerful buy signal zone. So if the price action does recede, you've not just got a set of buyers showing up because they understand the significance of the 618 fib level and that reversal here is quite likely and the price should continue higher, you also have this diagonal trend line which the price action has also historically bounced off. So you have a number of buyers showing up here, creating this undeniably powerful pocket where the price action hopefully would then ascend higher. And this is what it might look like. Buy signal confirmed, and upwards we go. And this is how you can use fib levels in combination with other bullish ideas, such as this diagonal trend line, to dramatically improve your success rate. In conclusion, if trading is all about the attempt to quantify how human beings interact with an asset's price action, a deeply mathematical process, and if trading is about trying to predict outcomes based on those interactions, Fibonacci levels can act as the bridge between the universal constants that surround us and our innate desire to interpret and control them. The Fibonacci retracement tool can quickly map out key support and resistance levels for you, but it can also help you understand which levels carry the most significance, and paired with other indicators and strategies, adding Fibonacci levels can help your trading legitimately become golden.
Ola Prime, trade with transparency.